It's always great to be back, helping our retire young family make those better investing decisions. Al, we have a really important show today. A little bit different than we've done in the past. I want to really talk a lot about fees, right? There's a lot of fees that people are getting charged when they have managed money in the
Sure.
financial markets, whether it's a retail account, a retirement account, whatever account that may be. If someone's managing that for you, they're charging you a fee. Now, there is also other fees that come along with that. So today we're going to talk a lot about the impact of fees. What is that really costing you? But more importantly, how can you minimize them? Before we do that, Al, I want you to recap what's happening in these markets. I mean, obviously, we had another great week in these markets, but there wasn't a lot of movement, I guess, overall. The S&P was almost flat for the day, 0.2% up. The NASDAQ, or sorry, for the week, the NASDAQ was up 0.8%. The Dow was up 0.1. So basically, there wasn't a whole lot of, I guess, movement for those buy and holders, right? So let's talk more about the opportunities that we have in these financial markets. What's causing some of this uncertainty in the market, I guess, flat markets, and then how can we capitalize on that?
Yeah, those numbers really don't reflect what happened in the market because we had some big up days and big down days. Just overall, that's kind of where the markets ended up. But we saw kind of an interesting thing happen this last week. In the first couple of days of the week, it was technology again that really drove this market. And when you think about it, if you look at the performance of the Nasdaq, over half of the performance of the Nasdaq has come from four stocks: Apple, Microsoft, Amazon, and Tesla. So the first few days of the week, those were the stocks that the Nasdaq was the part of the market that really took off. Then something happened. There was a rotation into more cyclical type stocks the last 3 days of the week. And I think what's happening is that people are trying to figure out where they should be positioned based on who's going to win the presidency, what's going to happen with the vaccine, because we saw a couple of the trials halted for a while, and then there was some good news, and then also the stimulus activity in Washington goes back and forth. So people are trying to figure out where they should be, which is a really good thing for us, Josh, because what they're doing is they're making these moves. They're doing this rotation, causing prices of things to go into a buy zone or a sell zone that we identify that our students use. So this is a fantastic thing for us. And again, I think people are they're trying to figure out where they should be based on what they think should happen. And we talk about this all the time, that's not what you want to do. You want to make your decisions based on what factually is going to move the price of something, not what you think the market should do or what you want it to do. Because the market doesn't care what you think, to be honest with you.
It does not care or even knows who we are.
Right, yeah.
The market's so big. I mean, us average investors, we can't move the market. It's based on the big money.
Yeah, we're about the size of a dust mite on a carpet in an auditorium.
You must have a pretty good eyesight. Those glasses must be pretty good to see that dust mite.
But the point there is that the big players aren't going to spend their time trying to go after us because we're so small. But what we want to do is be able to identify what those big players are doing, because really the best that anyone can do in the financial markets is to put odds in their favor, improve your probabilities or add probabilities to what you're doing, and then achieve the knowledge and the skills to preserve your assets if you're wrong, and then know how to realize and protect profits if you're right.
That's the key. I mean, I like how you mentioned keeping the odds in your favor, right? Trading and investing is not a be right every time game. If you have the odds in your favor at low risk, high reward, high probability entry points in the market, you let your your positions work for you. And you mentioned areas of interest. It's not just a certain one price. It's an area where the big money, the smart money are creating these moves, whether they're creating moves up, whether they're creating moves down. So it's important to identify where they are buying and also where they're selling. And now in these investing classes, you talk more about that, I guess, institutional order flow, how the institutions really create these zones you were talking about, where to buy, where to sell, timing the market. There is a time or in a place to enter the market. It's not just a guess.